Hello, a very good day to you. Welcome to another weekly analysis of Equifresh Academy. So, today is a new week, the beginning of the week. So, we just want to run through some instrument to see the potential movement of the market for this instrument. So, if you if this is the first time of checking out our videos, please do well to subscribe for future videos so you won't be missing out on anything. So, our last weekly analysis, if you went through them thoroughly, you could see that the market, as analyzed, it was the market went and in respect to analysis. So I think we did the US 500, this one here. We did the USD card, Euro USD, AUD USD, and some of them. And most of us that took the trade, it was very profitable. So without wasting much of our time, we're just going straight to. I think let's go with the USD chef. Let's check what happened last week. So you can see this is a very strong bullish move. Like the trend is very, very, very strong, and the bullish trend is still on. Okay, so let's break it down to the daily. As of market closing of on Friday, we can see the market closed with an inside bar indicating a pause. So that doesn't necessarily make a change of trend though. It's just a pause. As you can see, the market is still very far away from the moving average. So the bullish trend is not coming to an end anytime soon. So it's very, very bullish. So if you want to trade this market for this week, I think I should turn my chart into so you could get a clear picture of it. If I want to trade this market, I should be looking at a position, an opportunity of buying. Let's zoom out a bit. See, the market is kind of doing some pullback around this green EMA, but it's not a deep one. So you should be looking at a bullish move, a bullish continuation. You can see the market distance from the moving MA, the moving average is still very reasonable. So the bullish trend is still intact. Okay, so if I'm to trade this spell, all I do is to wait the London session commenced. Then I go to my H1, but first I have to make sure my H4 is bullish. My H4 candlestick is telling me buy. Then I do a confirmation of the H1. Once the H1 is telling me buy before I jump into the market. So the current area for the market to break is here. You can see the market is just doing a lot of retesting around this area. So that's that for the USD chef. It's a bullish trend, so in anything you do, make sure you're buying. And as for this, the NZD USD, let's see what happened last week. So it's a very strong bearish trend, unlike the USD chef that is a bullish trend. Okay, well, it's at a very strong demand zone. It might likely continue though to maybe around this zone or thereabout, because this is where there is a lot of buying potentials are gathered here. Me looking at price history, but definitely at this point the market has nothing to do but the pullback. Okay, looking at it, the pullback has already commenced. You can see a bullish engulfing here. market is to pull back to the minimum of maybe this level or here before maybe sinking. But before I jump into the market, I have to look for a direction from the H4. Though the market has gotten to this point, this was a swing low that was broken and is now retesting it. Okay, the market initially closed above this moving average, the green one, that's the 20, but currently is trying to retest. That is, the buyers are and the sellers are trying to compete to know who holds more orders, and that will determine if it's going to go further. Okay, so if you are on this trade for a buy, you have to make sure the H4. Okay, this is the H4. The H4 is in a bullish direction and your H1 is in a bullish direction. Why? If you want to take in the market, if you want to hop into the market at, should I say, let me call it the slightest means, whereby you barely run a negative, upon confirming your H4, your H1 on that direction, you could go to your 15 minutes. Okay, because your H4 could be telling you buy, your 1 hour could be telling you buy, but your 30 minutes could be bearish, could be on bearish engulfing. Okay, so irrespective of those two time frame telling you bullish, the 15 minutes has to run bearish, maybe do is a little pullback before reverses. So anyone that entered the market at the close of that H4 candlestick that is saying bullish, the H1 is still saying bullish, the market has to pull back in respect to the 15 minutes time frame that is saying bearish. Okay, so upon confirming the higher time frame direction, if you come to use your lower time frame as your entry, once you see there's a bearish engulfing on your 15 minutes, you won't wait, you won't enter the market, you pause. Okay, so as to wait till the market is now in line with the H1 and the H4 before entering. So people that enter the market earlier, their market might be running, their trade will be running negative, but since you didn't enter immediately, yours will start running perfect while theirs is running negative, meaning you caught the move from the very start of it. Okay, so that's just the benefit of time frame correlation and analysis after you've done your main chart analysis. Hope you get my point. So that's just it. And as for the, we show that one. Okay, let's check out AUD USD. Okay, I'm on a buy on this one. I just jumped into the market. So okay, this is a weekly chart, because it seems the market broke through this support. Yep, and is a bearish trend, like a reasonable bearish trend. So let's go to the H1, the D1. The D1 is indicating a bullish move, meaning that will be a pullback on the weekly time frame. Okay, so hopefully the market will be retesting this zone that it just broke. That's why I hopped into the market, hoping to cash these few pips, then and I'm out before the trend continues. Okay, so that's just it. Moving on to the H4. Exactly, you can see it's already above the 20 EMA and trying to retest this zone, which is the main resistance, former support and resistance now. Okay, so that's just it. So what I'm gonna do is, once this London session commenced, and then maybe I find that the market has pulled back to maybe this level or this level, I just wait for a reversal pattern to form, then I'll enter again in order to ride the profit, to ride the trend from the beginning to the top. Okay, that's just it. So let's just check out this one. I guess it's same thing that is happening here. Let's check out the weekly time frame. But here on this weekly time frame, what's happening here is that the bulls are already in. Okay, if you check out this level, you find out that the here has a lot of demands. There's a lot of bullish momentum gathered here. Okay, as to price history, you can see there was a lot of reaction here. There's a lot of reaction here. So, and looking at this last week candlestick, we could see the shadow is way more than the candlestick body, trying to tell you the rejection from the downward move is very strong, indicating buyers stepping into the market gradually. Okay, so currently I just, and checking out the daily, you can see there's a very nice bullish engulfing, indicating a strong bullish move. Definitely the market will be retesting this zone. Okay, there was a support that is now resistant, the support that was broken that is now resistant. The market will be retesting this zone. So, and if you look clearly, you can see the market did a little gap up. So let's go down to lower time frame to see the clear picture of the gap up. Yeah, you can see it from here. The market jumped to this place. Okay, so the market is trying to do a little pullback now because of this zone. Because the last time market got to this zone, it pulled it back like it was a real reversal. So I guess that's the major reason for this a little bit pause and pullback or whatsoever. But irrespective of what it is, the market is breaking this zone and is going way up to the former to the support that's now resistance that was broken before any other maybe pause consolidation or total trend reversal. Okay, so if you're entering this market, like I said before, make sure your two major time frame is in line. Then you come to your 15 minutes time frame and do the needful. Okay, so do that and you will be just fine. Happy New Week. Trade safely. Make sure your stop loss is intact. Okay, in all you do, make sure you don't enter any trade without a stop loss. A stop loss, you take profit, even if there's no take profit on your trade, but there must be a stop loss. Okay, and once you're in profit, do well to lock your profit. That's trailing your stop loss, moving your stop loss above your your entry point. Okay, yeah, on this trade there is no stop loss. Okay, so what I'm gonna do now is simply go to my price trade history and impute my stop loss. Okay, that's it. I'm simply saying once the market pull back, cover this gap up that was made and keep coming down. Once it gets to this level, I can't take it anymore. It should just take me out. Okay, so that's just it. And you can see it's in a very protective zone. Is in a very, very protective zone. Okay, so that's just it. You can see the market is already retracing back to the bullish direction. So happy trading week. Trade profitably, trade consciously, and trade carefully. So do have a lovely time trading. If there's anything you want me to cover, any topic or whatsoever, simply leave it at the comment section below. And if this is of great benefit to you, hit the thumbs up button. Thank you and have a lovely time.